Okay, so right now we're looking at the pound yen on the 15-minute chart. Looking to take a Forex trade. Well, actually, I already entered the position. I entered a short position. And I had my stop right above this resistance level at first. But since the market is kind of going in my favor right now, I did move my stop down just a little bit. My first target is going to be right here at 138, right? And what I mean by that is if the market comes down, then I will just take off maybe half of my position or something like that, or maybe a quarter of my position. I'll leave the rest on though. Because what can happen is the market can actually continue to fall and go down to 137.5. And I still want to be in the position if that happens. You can ride out the trend or the trade as long as you need to. There's no cap on how much you can make. There's no expiration. There's none of that, right? You're out here and you're completely engaged in the market. So what happened was the market made a nice push to the upside. Okay. Nice bullish move to the upside. And it actually, came up to 138.854, which is a resistance level on the pivot point. Now it attempted to break above that level, but it actually failed. And then what happened was the market then attempted to break above that level once again, and it failed once again, giving us this nice strong bearish candle right here. Now, for me, this was a strong indication. I've seen this time and time again, that the market just doesn't have what it takes to break above that level. It's obvious at this point, okay? It's probably going to make its way back down towards that daily pivot. So for me, once I saw that it came down a little bit, I went ahead and entered in a short position. I had a really tight stop, okay? And my first target is 138. So as you can see, it is making its way down to 138. Okay, so what I might just do right now is just go ahead and take off a little bit on the trade. And I'm glad that this is happening right now so you guys can kind of see. So I went ahead and took off part of my, or half of my position. I'm still in the trade though, so I'm just going to kind of let it ride out and see what happens and where it goes from here. What I want to do now is just kind of bring my stop down just a little bit, right around here somewhere, so I can minimize that risk. So basically, what I'm doing is I'm kind of just trailing along with the market, and eventually I'm just going to have a risk-free trade. Okay, we are back, and it looks like the market did drop off a little bit more than where it was before, and it's getting kind of close to that target right there at 137.5. So what I'm going to do is I'm just going to bring my stop down just a little bit. Okay, we sold the market right up here, and we just kind of been just trailing behind it. We're just taking as much as we can as it moves in our favor. So what I'm going to do now is just I'm just going to take a little bit more off of the trade. Okay, so we did take off a little bit more on the position. Okay, so it doesn't matter what happens from this point on. I could care less. I've already made money on the trade. It could go back up and stop me out here, and I still will make a nice, a nice profit on this trade. And that's the idea, guys. You wanna wait for that good opportunity, and then you want to execute. And then once you execute, all you're doing from that point is you're just managing the trades. If you're in a winning position, you need to get more comfortable with letting it ride out. Okay, don't be so anxious to close out of these trades just because they're in profit. I know a lot of us, as soon as we see a trade go into profit, we want to go ahead and close the position because we don't know, we don't know when we're going to see that profit again. Let it ride out because you don't know how far that position can go in your favor. Okay, and this could be the biggest trade of your life if you just remain patient and just let the market play itself out.